Welcome to This Explainer. Today, we're diving straight into what is honestly a massive, game-changing shift in international real estate. Look, on April 29th, 2026, the Dubai Land Department dropped an announcement that is literally rewriting the rulebook for global property investors. If you've ever even toyed with the idea of buying property overseas, or you're just fascinated by how global markets tick, you are absolutely in the right place.
So 750,000 dirhams. To put that into perspective, we're talking about roughly 204,000 US dollars or maybe 320,000 Australian dollars. For years, this exact number was a massive, immovable financial roadblock. It was literally the bare minimum you had to drop on a property in Dubai just to get a 2-year residency visa. Well, in a completely historic move, that barrier, it's just been completely wiped out.
Okay, let's dive right in. Here's exactly what we're going to cover today. First, the 2026 visa rule change itself. Second, we'll compare Dubai's visa options. Third, the market impact and hotspots. Fourth, exactly how to secure residency. And finally, taxes and the financial realities of it all. All right, let's kick things off with part 1, the 2026 visa rule change. Now check out this contrast because it's pretty wild. Under the old rules, say you bought an entry-level studio for 500,000 dirhams. You own the property, sure, but you got absolutely zero residency benefits. You're just locked out. But now, under these new April 2026 rules from the Dubai Land Department, there is absolutely no minimum property value for a sole owner to snag that 2-year investor visa. No minimum. And if you're buying jointly, maybe with a spouse or a business partner, the minimum share value has plummeted to just 400,000 dirhams per person. As the experts over at Savills Middle East point out, this completely democratizes the market. It throws the doors wide open for first-time international investors who were, frankly, priced out before.
Moving right along to part 2, comparing Dubai's visa options.
Now, what's really interesting here is how the different pathways stack up. The 2-year investor visa is now your ultimate entry-level tier. Again, zero minimum value if you're the sole owner, and yes, you can actually sponsor your spouse and kids with this. Stepping up a bit, we've got the 5-year retirement visa. That requires a 1 million dirham investment, but, and here's the catch, you've got to be 55 or older. Then, at the very top, the premium tier is the 10-year golden visa. This one requires a hefty 2 million dirham investment, but the perks are incredible. Like, there's no minimum stay requirement to keep the visa active. So to be clear, the new 2026 rules didn't touch the retirement or golden visas, but they absolutely blew the doors off that 2-year option. Which brings us to part 3, market impact and hotspots. Okay, let's look at some real market data from ValueStrat. If you combine those lower brackets, you'll see that 24% of already home sales in early 2026 were happening completely below that old 750,000 dirham threshold. I mean, nearly 9% of sales were under 500,000. Before this rule change, you had nearly a quarter of all buyers driving the market, spending their money, but getting zero residency perks in return. Now, that entire massive slice of the market is suddenly visa eligible. And this new accessibility, it's fueling some seriously explosive growth. Get this, in just the first quarter of the year, Dubai saw a staggering 252 billion dirhams in real estate transactions. 252 billion. That's a 31% jump year on year. And the actual volume of transactions rose by 6%, hitting over 60,000 deals. Real estate CEOs are pointing out the obvious here. When you remove these massive investment barriers, you bring in a ton of fresh capital and you attract long-term residents. It's basically taking an already strong market and throwing fuel on the fire. So you're probably wondering, where exactly is all this new money going? Well, analysts are tracking massive demand for studios and one-bedroom apartments. The prime hotspots right now are places like Jumeirah Village Circle, Dubai South, and International City. And the why is pretty simple. You can pick up an entry-level property in these areas for anywhere between 250,000 and 700,000 dirhams. So not only are you snagging a residency visa, but these suburbs are churning out incredible gross rental yields. We're talking between 7 and 9%. It's an absolute magnet for international buyers. We're seeing huge contingents from Australia, South Asia, and the broader Arab world, all chasing those high yields. All right, let's get practical with part 4, how to secure residency. Let's see how this actually builds step by step. Because the amazing thing here is that most of this whole process can be started remotely.
Step 1, you buy your property, could be completed, could be off plan, and you get your official title deed from the Dubai Land Department. Step 2, you log into the Land Department's Tasking platform to request a property status certificate. Easy enough. Step 3, you submit your actual visa application to the GDRFA, which is Dubai's immigration authority. And finally, once you actually arrive in the UAE, you pass a standard medical exam and pick up your Emirates ID. It's really that straightforward.
Now, you definitely need to know what to budget for the logistics. The Dubai Land Department is super transparent about this. The official service fee for the 2-year investor visa comes out to exactly 10,212 dirhams and 50 fils. They also say the standard processing time is incredibly fast, usually just 7 to 10 business days. It's just a well-oiled machine, entirely designed to get investors up and running without the usual red tape. Finally, part 5, taxes and financial realities, because we have to talk about the fine print.
Let's start with the good news, because the local financial perks in the UAE are honestly almost unheard of in traditional Western markets. This quote pretty much nails it. Investors are pulling in these impressive 7 to 9% yields, all while paying absolutely zero land tax, zero stamp duty, and zero personal income tax in the UAE. Oh, and now they get a residency visa thrown in on top? It's a seriously persuasive pitch.
However, and please don't gloss over this, you have to remember the tax man back home. Let's use Australian investors as a prime example here, since our sources highlighted them. Even though Dubai isn't taxing your rental income or capital gains, the Australian Taxation Office absolutely is. As a resident of your home country, you usually still have to declare that foreign rental income, and you're still on the hook for capital gains tax back home. You also have to declare significant foreign assets. Plus, don't forget currency risk. The UAE dirham is pegged to the US dollar, so any currency fluctuations between your home currency and the US dollar, that's going to directly impact your actual returns. It's a global puzzle, and you really have to see all the pieces.
Wow, we have covered a tremendous amount of ground today. We've seen how wiping out that 750,000 dirham barrier has just completely opened the floodgates for a whole new wave of global investors, pumping billions into high-yield suburbs with this super streamlined digital process. But that leaves us with one really vital thought to chew on. The barrier has gone today, but as we all know, international visa rules, they change, they evolve. Given how incredibly accessible this new pathway is right now, is now the right time to secure your foothold in Dubai. Thank you so much for joining us on this explainer. I really hope breaking this down helps bring this massive policy shift into perfect focus for you.